We've heard a lot about retirement and pensions in general, the different societal drivers that make the situation more and more complicated, but also more and more diverse across the European Union. And on the second panel now, we'd like to drill down a little bit further into not the first pillar, as was on the first panel, but rather on the third pillar. And I'm delighted to have a very nice panel lined up here with experts. May I refer a little bit to the German situation, just to frame the debate a little bit on the third pillar. So that's the situation I'm closest to because I work for German consumers. And has been mentioned before in 2001 to stabilize Pillar 1, to stabilize A, the contributions, and B, the payouts of Pillar 1, private pension products that would get some state funding were introduced to close that gap. And we're quite in favor of this happening, and it would have worked, actually, to close the gap for Germany if consumers contributed the minimum amounts that were suggested, and if the interest rates had been 4% or more during the product lifetime and the cost didn't override 0.43% per year. Unfortunately, those costs in Germany at the moment, as we look at the market, are situated somewhere between 1% and 3%. So we have the following situation. Public pensions alone are insufficient to cover the needs of the retired. The pension products that we find for third pillar are too expensive. They offer too little return. On top of that, they are too complex, and you cannot properly compare them as a consumer. So what's the situation after all? The result is that too many consumers actually just give up and do nothing. And what they risk, and it was mentioned on the first panel, we just had the report come out this week in Germany, is that a lot of people facing retirement are also facing poverty in their retired age. So we're here to discuss how we can change that, and the European Commission has set out to propose something that would improve the situation, and I'm really delighted that Ms. Nathalie Berger could join us today from the European Commission. She's the head of unit for insurance and pensions at DG FISMA, and ideally I would have liked to say today that she could have presented us the PEP proposal, because it should have been presented today at midday. Unfortunately, this is not the case, but let's put it like this. You have the opportunity to get more input today and to put it in the proposal before you present it on Thursday. Ms. Berger, the floor is yours.
Thank you very much, and thank you for inviting me to join this very interesting event. I really like the title, the pot of gold at the end of the rainbow. That makes me think of all the legends and all the stories, and I have been part of those little girls who were searching for the pot of gold at the end of the rainbow. So nowadays we're looking into the opportunities we may have to develop a system to ensure that every little girl become an adult, every little boy become an adult, and aging will have the possibility at some stage to find a pot of gold at the end of the rainbow. The question being, of course, will the pot of gold be there, and what will be the size of the pot of gold? Knowing that the state's Pillar 1 retirement systems are following sometimes difficult path, and knowing that depending on the member states, on the situation, there might not always be access to occupational pension funds, that people have to rely more and more on developing their own funding for their personal retirement, and that in many markets in the European Union there is a very, very low level of supply. It is only in 5 member states that you have more than 15% of assets in management, and if you compare figures in between the Union and, for example, the US, everything will be absolutely striking. So we have been working on the basis of a public consultation. We've organized a public hearing. We had a lot of professionals, but also citizens participating, responding to our consultation as such in their personal capacity. We had a lot of them, not far from 500, which is quite unprecedented for a consultation undertaken by such a technocratic institution as the European Commission. And on the basis, we have prepared an initiative which is to be adopted, I would say, imminently. So that's before the end of this week. Not today, for reasons which have not much to do with the topic. We have worked on the basis of the contributions received in the course of the consultation and on the basis of a study which we hope to be able to publish at the same time as we adopt our legislative initiative, a study to do the mapping of the tax situation in a member states regarding personal pension product. And we are proposing a package with an instrument which will create possibilities. It will be enabling legislation which will give the possibility to providers to develop a pan-European personal pension product. We are creating a label, a quality label PEP, and we want this label PEP to be really assimilated to a high level of quality and consumer protection. So there will be a number of elements in this regulatory statute in order to ensure that, for example, the prospective consumer is sufficiently informed before contracting a PEP, that during the lifetime of the contract, the consumer is regularly informed on an annual basis of the situation of his or her savings. We will ensure that pre-retirement age, there will be a specific information to the consumer. And we want to give consumers the possibility to have as much choice as possible between different types of products. This is the reason why we would like to open up the possibility to different types of providers to develop a product, a pan-European personal pension product. And I mean by different types of providers, financial institutions which are regulated at European level. These, which will be listed in the regulatory statute, these will be entitled to request authorization to develop a PEP. And once a product will be authorized, it could be sold across the territory of the European Union. We think about establishing a balance, and what you indicate in the program is really, it was a decisive line or guideline which really guided all our work all along this preparation, how to find the right balance between performance and investor protection. We want, on the one hand, to open up markets, to open up possibilities, to give providers a single market, to allow building economies of scale, to allow reducing costs, notably by standardization and by reducing reporting costs. And at the same time, we want the consumer to have the possibility to make an enlightened choice, have access to a product which should be simple and transparent, and benefit from a number of protection measures. We would also like this product to be innovative in different areas. First of all, we're thinking about getting the young people to take a PEP. For that, we need to be a little innovative, a little modern. And so, for example, allow the transmission of information or allow the information to be transmitted to the consumer to be done on an electronic basis. But with the possibility for those who wish to get information on paper to get it free of cost. But we really hope to be able to attract the youngsters who don't want to have to go to a brick and mortar shop and have to discuss, etc. Well, the rules will be a little bit more granular than that, but you will see something which I hope will be considered as slightly, at least, innovative. Then, for the product to be really pan-European, we need to ensure some portability. And what is the problem that a lot of consumers have mentioned to us? That when changing residence in the Union, they have not been able to continue contributing to the same personal pension product. So we want to give them this possibility. And we hope we will be able to do this via our regulatory initiative. So to have a product which can match the specificities of the national markets, but at the same time will allow consumers to continue contributing to the same product when moving across borders. We also have been very sensitive to complaints received from consumers on the, if I may call this, lock-in syndrome. The absence of possibility to change provider, or whenever it is possible to change provider, the penalizing fees are so high that people are not going to do it. So we would like to get a system whereby the consumer has the possibility to change provider with limited, at least a cap on switching fees. Of course, we should ensure that there is proper supervision of the product and of the provider. Out-of-court redress system, the possibility to lodge specific complaints in case there is a problem. And so you can see that we are trying, or you will see when this will be published, that we are really trying to strike the right balance between the objective, the really typically CMU-oriented objective of opening up markets, channel investments via institutional investors into long-term economic projects. We have recently provided with some measures in that regard, notably by reworking the calibrations on insurers' investments in infrastructure, for example. So we would like this money to be channeled back onto the economy to benefit long-term investment projects. At the same time, this is, of course, to be made to the benefit of the consumer. The consumer is to be properly informed and is to have a sufficient protection all along the period of time. We also would like to open up possibilities for the consumer to choose, depending on the commercial offer, of course, to choose between different types of decumulation systems. So we don't want to be prescriptive on whether this product should lead to this or that type of decumulation option, but we want this to pertain to the commercial decision of the provider, to the commercial offer, and of course to the choice of the consumer. I should specify that, of course, this is a product which is to be developed and to be subscribed to in view of retirement. So this is not whatever type of financial services, financial investment. This is a very, very specific product. And this is why it will be accompanied with such features and such specificities. Thank you.
Excellent. Thank you very much, Nathalie, for giving us at least a glimpse of what we can expect. And between the two of us is Ilka Huben, as I've just learned how to pronounce the name properly.
From the Dutch.
From Dutch. And Ilka works for the German Insurance Association, and she made all her way to Brussels today. And I hope you can comment a little bit on what you've just heard. So, from an insurers association, obviously, perspective, what would be the key features that you would like to see from such a PEP? Or maybe you can even already discuss and react a little bit to what you've heard.
Well, thank you. I've listened very carefully, Natalie, to what you've said, because we're all looking forward to the legislative proposal, and I admit we are all a little bit curious. I think I have to say that. So thanks for the information. Thanks, Finance Watch, for the invitation. As a German, please allow me, because I will not lead you into a German discussion. This is not what we're doing today. But maybe turn it in a positive way, what my colleague from the Consumer Protection Organization just told you. We do see it a little bit different, the German situation. But I think maybe to put it in a positive way, maybe there are things we can learn from the current debate we're having in Germany concerning cost transparency and also modern ways of distribution. So I think we are just right in the middle of a fascinating process here, when the EU is trying to set another mark. So a lot has been said about how to stimulate private pensions, especially, and does a PAP contribute to a larger strategy or not? I think we've heard a lot also today, and thanks for your enlightening presentation, what the main goals of a PAP are and what it should be. So I think there are chances and opportunities, but we do see still some challenges that are related to a PAP to become a real true pension product. So maybe let me start with this one. We do not think a PAP is a panacea, but offers a lot of new possibilities for the European markets. Let me get to that a little bit more concretely. I think the opportunities of a PAP in general are that there is a kind of salvation to underdeveloped or underserved markets. I think this is what we can observe in certain areas, and I think we have a very different picture here in the member states. It's not one solution that serves every market in the same way. And I think it does strengthen a multi-pillar system. And I think this is also something we learned from the first panel today, that there's acceptance of a multi-pillar system. But as you have pointed out, Miki, it's about the balance between the pillars and rendering them all strengths in a certain way. So I think promoting the third pillar with a PAP is a value itself. From a consumer's perspective, or as we say, from client's perspective, we do think that a PAP can increase and improve the range of products offered, especially in a cross-border sense, or where you have a lack of market entry. So I think that could be a possible solution, and it does give access to pension products where maybe it's more complicated or difficult to have one. So what are the challenges of a PAP? And I do need to mention them, and this is why we are, as I said, listening so carefully to what we've just said, because we believe that a PAP does need a social policy function in order to, and we have had that on the panel before, especially for the vulnerable focus groups on the labor market, in the pension system. We've talked about people with lower income, women of migrants, of people with a diverse biography, I would call it. So for us, it's really crucial that we are talking not about another savings product, another savings wrapping, but that we're really talking about a true pension product. And for us, that means it's covering biometric risks, and it's covering the risk of outliving your money. And I think this is what we've talked about the whole afternoon, but which is very essential for a true pension product. So for us, it's very important talking about decumulation options, and they were really deeper into a product design already, and I think we're debating about this still here on the panel. For us, having an annuity, a lifelong payout as a mandatory option in the product itself is something that is very crucial to the success of such a product when we are talking about pensions. And having lifelong expenditures requires lifelong incomes. So we believe that it's important to take this into consideration. Plus, of course, there needs to be a balance. You've mentioned that, Natalie, between the return on your investment and a certain safety and security. The risk to be opposed to the ups and downs on the capital markets is something, at least, and I say that also for European, but from a very special German perspective maybe, that safety, security, and a certain amount of guarantees is something that is also ranked quite highly by customers, and that should be taken into consideration. And last but not least, concerning the regulatory standards, I think we need something like a level playing field when it comes to regulation. I think it would be, from a consumer's perspective, it's more than a challenge, it would be really a problem if we had a regulatory arbitrage here. You mentioned that the providers being eligible for those products should be regulated on a European level, and I think we have to take into consideration what that means really in detail. I'm not talking about Capital Markets Union today, that really is too far and the time is running, I know. But let me maybe finish with one thing. As I said, the PAP is not a panicky. I think we need a real bigger approach that is a holistic approach when it comes to mobilize people to think about their future, to invest in pensions. That is sometimes also due to a lack of awareness. So I think that is also something where the European Union can do good in helping or assisting in improving financial literacy, in making people aware, even with a PAP, making people aware of that something needs to be done. And I think what has been mentioned before, general trust in economic systems and in governments. So I think it's more than a PAP that we need to really stimulate more private pensions, to stimulate more private initiatives, but the PAP, I think, can be one step. So I'm really looking forward to our panel today. Thank you.
Thank you, Ilka. Well, that doesn't sound too pessimistic. The devil lies in the detail, as I understand. And you both mentioned it's a lot about striking balances. So I'd actually like to hand over to Johan, who will introduce the organization or company / he works for, probably best himself. And Johan, what kind of balance would you like to strike? I have in mind that when we talked for the preparation, you said, performance, investment protection, this is something really difficult to bring in balance. And when it comes to the key requirements of the design, you've had some very interesting experiences already in the Netherlands, and we'll be happy to hear more about that.
Well, I'll phrase it the way I prepared, if that's okay with you, Isabella. Thank you for giving me the floor. Thank you for the invitation to Finance Watch. I'm very appreciative of being able here to share some thoughts about this particular and important subject. Natalie has made me very, very curious, really looking forward to Thursday. I think I heard quite a few developments over time in the way the proposal, which we do not yet know has been described. And I think most of them seem to be going in the right direction. So that makes me even more curious. But I will not speculate too much, because then disappointments can be left for Thursday and not for today. I also took note with great interest of the 10 principles Finance Watch developed. And at the level of the principles, I think they're the right ones to a very large degree. When you look at the smaller print below, there are things where I would start to disagree or reformulate. But I think I can see some convergence, which I think is very useful for us. APG is a pension services provider, which is wholly owned by two very big Dutch pension funds, and our main clients are also pension funds, a slightly larger group of 7 pension funds in the second pillar. We do have other lines of business. We have a small or smallish, I should say, insurance group in the group APG as well, which also offers some pension products under insurance rules. But we are mainly in servicing second pillar EORPs. then that is what we do. We are rather big. We're the biggest in the Netherlands. Assets under management for all of APG, for all our clients, because they're not our assets, but those of those pension funds, is something about 450 billion euro. And we serve about 4.5 to 5 million participants in the Netherlands. So it's a pretty big thing. We feel that the real issue which is at the table, which we should at some point address, is the pension gap in Europe and the fact that very many people do not have access to a decent second or third pillar pension. And that really is, in the decades to come, something we have to solve. And the other thing is that the two main points I would like to make in that context on the PEP is, first of all, we need a wider pension policy around PEP in which we can put PEP as an element. PEP for us would be a piece of the puzzle, but it's not all of the puzzle. And we cannot lay all of the puzzle just with PEP. That simply will not happen. We think that FISMA is bringing to the table a very interesting and new and innovative idea, which we really should take very serious. But we would like to see a wider context which has a more integrated view together with work done at DG Ample, DG ECFIN. We also think it's interesting that the Eurogroup has recently concluded that they want to measure developments in pensions. The standards they set, which, well, of course, that was to be expected from ministers of finance, is very much sustainability. We would like to see a little more pension adequacy there. But the idea of measuring what we are doing and comparing and not making everything the same, I think is important. For us also, covering the pension gap is more important than mobility or portability. We think portability, we understand why this is an issue to many people, but it's not where the big money or the big numbers are. And it really is where many of the complexities are. So the wider pension policy around it is an issue, which would be helpful if that could be developed. The second thing is that the pension as a product, we think, has to be really a pension. And there I agree fully that we need serious rules on decumulation. I wouldn't go as far as to say that it has to be a straight annuity, but it has to be something which is there in order to allow you to pay for the time of your life that you're not able to work anymore. One way or another, that has to be arranged for. That is different over different member states, but it's not an investment product and it should not look like an investment product. Also should not be just something for the relatively well-off or the rich. Nathalie spoke about a quality label. I think this is extremely important, also because it may come back to haunt us. If in 5 or 10 years' time we have made something which is the kernel of the next mis-selling scandal, then we are not only doing something very bad to the pension market, we also do something very bad to the EU. So we have to be careful here and pay a lot of attention how this can be done properly. But indeed, if we overdo it on protection of the consumer in too simplistic a way, we feel that this would harm the return on investment and make the product, in fact, unattractive. It sounds very good to put a guarantee somewhere around, but any guarantee will cost you money and will hurt the return on investment. Switching will make it much more difficult for the providers of this product to go into long-term and illiquid investments, which are important in the present market circumstances to get to a decent return on investment. So there are very important balances to be struck, and rules shouldn't be too simplistic. If you look at this in the Dutch context, then at the pension fund, a lot of this is governed, is regulated by having good governance systems where you have social partners who take the most important decisions and thereby protect the participants. This is a completely different approach to how you would do that in other financial institutions. But it's important to see that there are different ways to roam, which may all be equally valuable. We should not oversimplify this, because then we make a product which will not be very attractive. It's also very important, if you want to be able to really sell it, that it's innovative and that it can be offered digitally. There I heard Nathalie with something which I found a little double, in the sense that on one hand this will be allowed, but on the other hand you have to be able to provide all information on paper free of charge. Well, free of charge basically means that the consumer doesn't pay any for it, but If the consumer takes the product indirectly, it will be paid, and otherwise it will have to be paid by the provider. So also there, a balance to be struck. I would say that also there are very many developments in the market on the moment which should make it easier. At APG we work a lot in order to find innovative ways for providing financial advice to people by all kind of robotics and artificial intelligence. We have developed a tool by which even in a defined benefit pension scheme you can see how much has been saved for you. We do an experiment with that for 5,000 participants. It will probably go live for the biggest pension fund somewhere in the first half of next year. We have set up a peer-to-peer platform for financial advice where you can free of charge contact experts who will help you rephrase your questions so that you can make some progress. There's a lot of developments here. As investors, we work with an investment in China with a company which is already now, but that's of course China, it's a different system than ours, but where you can manage your personal pension on an iPhone, and they have an amount of participants which is incredible. Now we would like to take all of that to the Netherlands, and then I come back to a somewhat more sobering experience of us. In the Dutch labor market, a very important group which is growing is people who are working as independents without personnel, to a large degree doing work which ordinary workers also do, and they compete with people with fixed contracts. These people fall to a large degree outside pension funds. Therefore, they should cater for their pension in a different way. For them, we have developed a specific third pillar insurance product with all flexibilities we could think of, plus ticking all the boxes of taxation, which will be a hard act to follow at the European level, this taxation thing, but we did in the Dutch context. In a market which I believe to be, well, the maximum guess we made was about potentially 500,000 people. I think we managed to sell about 3,000 to 4,000, but we still believe we have the best product on the Dutch market. This is a bit sobering, because part of the truth is that very many people don't take a pension out of their own. They don't like to think about pension. Pension is associated with being sick, being poor, and dying. Most people don't want to think about it, so they simply postpone it. And that is the beauty of having a larger strategy where you can also have some compulsion and where you can have things like auto-enrollment, etc. So we need more than just this, but this is certainly a piece of the puzzle which should be studied carefully. Well, then my last warning, I agreed with almost anything which was said by Ilka. The one thing, though, which I found a little scary is the level playing field argument. If that is all just upwards harmonization of standards and making things equal which are not equal, I think we would very quickly start to disagree. Thank you.
Thank you, Johan. So, now we've heard a bit of a description of something we don't know yet. We've had a first comment of what insurers might think of it, providing already some of the products that could fit under that umbrella. We've heard not a counter model, but a bit of some experiences. And now I'm looking forward to hear something from you, Catherine.
Okay.
You represent Share Action, and you thrive at making the investment landscape more sustainable overall. Thanks for, first of all, maybe telling us a bit more about your work. And then, in terms of governance, because we've looked a bit at the product features of a possible PEP. Now, Johan ended a bit on this level playing field problem. What would you maybe like to see in terms of how such a product ought to be governed, or maybe you have some experiences also that you would like to share?
Well, thank you. So let me also thank Finance Watch for putting this very timely event together, and also Natalie for giving us some pretty good hints there what's coming. So that's very helpful. Share Action is UK-based, but increasingly working all across Europe. And our origins are very much around representing the voice of pension savers with a particular interest in what happens to their investments in the real economy. And not all pension savers are interested in this, but more and more people are recognizing that the money disappears into a black box called the capital markets, but actually it's deployed in the real world, and they're very interested in that. And organizations like APG over time have become extremely engaged with thinking about sustainability risks, which are actually highly connected now, and visibly so, to outcomes and long-term returns. And I just want to reconnect and resituate the PEP proposal in the context of the Capital Markets Union. I mean, it is actually emerging out of an initiative that's about trying to liberalize capital markets in a way that enables growth and investment to keep Europe economically competitive. And that needs to be done in a way that engages with these debates, both about people having a sense of connection to what's happening to their money as it flows around the world and in Europe, and also being aware of how that money is deployed in a way that leads to the Europe that we want to see. And I must say I'm very encouraged by the direction of travel and the narrative that's emerging around, for example, the high-level expert group on sustainable finance in connection with the CMU. So if the PEP is to be a success, it really needs to be a product that restores public trust in capital markets and public trust in saving, which is not hugely strong. There are different reasons of that. I mean, you have referred to the fact that people just like to put it off, and they like to think pension saving, it's a bit boring and so on. So there are all those kind of headwinds. But equally well, people get concerned that they can't necessarily trust the institutions where the money is going. So I think for the PEP to be successful, and we wish it very well, and it is an incredibly important part of tackling all of the demographic challenges that were raised in panel 1, we need a really robust governance regime for the PEP. So that we're really protecting the consumer interest, we're recognizing the enormous information asymmetries between ordinary consumers and the professional investors who look after their money. Where you get information asymmetries like that, you get consumer detriment unless you've got very strong protections in place. So the sort of thing that we would like to see to help the PEP to be successful and to restore and facilitate public trust in saving in Pillar 3 products. We need really strong legal fiduciary duties which absolutely ensure that any institution looking after someone's PEP, someone's retirement savings, has a clear legal obligation to put the consumer's interest first in all of their decision making. We have struggled with this in the UK. I have to say, we have quite a long history of Pillar 3 products where consumers have had very poor outcomes. And we, in the UK, have recently been strengthening the governance regime around Pillar 3 products. We've introduced something called independent governance committees in insurance companies. It's gone some way. I think it needs to go further. So, for example, well-trusted pension schemes like the ones in the Netherlands and Sweden have savers on the boards of the institution so that you can see as a saver, there's somebody like me that has their money in this institution sitting on the board who also has an interest in protecting the money. So these are the sort of, we need obviously a very strong regime of information rights for savers and also transparency so that third-party organizations with a consumer interest can compare institutions. If we have these kind of strong legal underpinning regime plus a really strong disclosure and information regime, then I think we don't have to have too much of the kind of restrictive regulation that inhibits some of the features we'd want to see, which is long-term investing, innovation in investing, because there is this balance to be struck between protecting the consumer interest and killing all of the innovation or killing all of the, the kind of sustainable, long-term and successful investment strategies we would want to see in a PEP. So I think those are really the key things I would want to say, that there is some learning experience from the UK around Pillar 3 where we have some lessons around how to ensure you've got a really trusted regime and that we also would want to see things like default funds with even stronger consumer protections built in so that, most people do not want to make a lot of active investment choices and they're not well able to make those kind of investment choices. But the default regime needs to be one where there's the highest possible level of governance regime putting the saver's interest first. So I think it sounds like these sort of features are being designed into the PEP proposal. We're obviously going to watch it with great interest, contribute to the debate around it. I would very much like to echo your point that this is really around, this is embedded within a bigger story of which IORPS 2 and other elements of the CMU regime form a part, and we need to think sort of holistically around how the PEP sits inside of those. And we were very encouraged to see the elements in the IORPS 2 directive looking at sustainability as an important financial risk issue. We hope to see those in the PEP as well, so that we have a sort of smart harmonisation between these two really important legislative pieces from the Commission and from Europe. So we wish it well, and can't wait to see the detail on Thursday.
Excellent. Thanks a lot, Catherine. So we've set the scene a little bit. You see a bit in what direction this is going. You see a certain number of key issues emerging. Because we unfortunately only have 1 hour for this discussion, I'd like to get a little bit of input already from you, from the audience. So if anyone has comments or questions, I'm happy to take them, and then the panelists can react. If you're addressing it to a certain panelist, please say so. So there are a couple of questions here. Maybe we start at the back and move forward. Please don't forget to state your name and maybe the organization that you're representing. Thank you.
Hi, hello. My name is Jean Comte. I am a journalist working for different specialized publications. I had one question for Ms. Berger. You explained very clearly what the future product can look like, and you insisted that the portability was very important. Would you mind to elaborate how you will articulate that with the taxation issue? Because being portable means that you can use it in different countries, and the taxation will be very different. So how can you have both together? Thanks a lot.
Maybe we can collect 3, or I saw 4 hands. Maybe we collect 3, and then we make another round. There was, yes, the...
It's also a question to Nathalie Berger.
Could you please say...
My name is Udo Philipp. I work for the Institut für Finanzdienstleistungen. It's a consumer protection institute in Hamburg. I would like to understand, you've probably done a lot of studies to see what works and what doesn't work. Have you analyzed the European countries and seen in which country something works really well? Could you name the country and sort of the model? And you probably also have analyzed sort of the behavioral science, behavioral economics and these things. And one of the things I retain from that is that a standard model, an opt-out thing, and with sort of a default option works particularly well. I have not heard that you're considering that. Are you or are you not? And if not, why not?
Thank you. And I think the third for the first round is there.
Thank you. Guillaume Proache, Managing Director of Better Finance. First, a short comment. I am happy to see that Finance Watch positions on this PEP are very much in line with the ones we've been putting forward now for some time, and so it bodes well for hopefully the influence of civil society and user side in the upcoming European policy on pensions. I have a question and a concern, though, about opposing performance and investor protection. Actually, and we've done a lot of research on the real return of pension products, long-term returns is an essential prerequisite of pension protection. I just give you one example. If you save 10% of your income over 40 years, you have a life expectancy of 30 years. If you have zero real return, which happens too often, and even negative real return, you have a 12% replacement income. If you have an 8% return, you get a 50% replacement income. So this is really essential, and I can give you an example, and I'd like to get the panel's feedback, where we really, pension savers, we get abused by the so-called safety features that we hear. if you give a nominal guarantee at retirement, if even with a 2% inflation only over 40 years, you are losing 55% of the value of your pension savings. I don't call it a safety, I call it... No, I will not say. I'll remain polite, thank you.
Okay, shall we take one more, Charlotte? Okay. Right, then let's collect the portability one.
Okay. To Mrs. Berger also. Marie-Jeanne Pasquet, I am a journalist from minoritaire.com, which is writing for shareholders. And I suppose, Mrs. Berger, you know that big companies in France, what we call multinationals, dreams to delocalize their headquarters in European countries where taxes are less heavy than in France. So they face a big problem till now. That's the portability of senior executive pension scheme. Do you heard about retraite chapeau in France, perhaps? So, do you think that your PEP, I say that because I heard about that with a manager. Do you think that your PEP and its portability could solve their problem and help delocalization in Ireland or Lithuania?
Right, thanks a lot. So,
Cheeky
I
question.
summarize. We have several questions for Nathalie Berger, which is the portability versus the taxation issue and the delocalization issue. We can collect that. Then there's the question from IFF about behavioral economics, default model or not. And Guillaume Prasch basically asked, is a nominal guarantee not rather wrecking consumers, if I may summarize? So, and that last one goes to all the panelists, so maybe you'd like to start?
Thank you very much, and I will try to address these questions in the chronological order, and I would thank you for asking about the preparatory work and how we have built our proposed legislative initiative. Indeed, we have conducted a study, and I briefly mentioned that we hope that the study will be published exactly on the day at which the Commission will adopt the legislative initiative. So we have, via a consultant, examined the 49 personal pension products in Europe. And you will see in the study, or you will rather see in our impact assessment, which will be published on the very same day, that we are building on the features of the 5, or depending on the cases, the 12 products in the European Union which have the highest penetration index. And you will find a table which will compare the key features of these products, and you will see that the PEP not only gathers the best features which have been observed at national level, but also brings a little bit more onto the European scene than these products. So I will invite you to look into this document, and of course do not hesitate to come back to us if you have any questions on this study. It's been an absolutely huge work to examine this, but extremely interesting and enlightening as to what should be the right way forward. A question on the default option. Yes, of course. When developing a regulatory framework for a product which is to be offered to a consumer, it is extremely important to have a default option. So the regulatory framework, the legislative initiative, will provide for one default option. And this default option will need to ensure some capital protection for the consumer. And there we'll come to the question which was asked by Guillaume, and I will be very interested to listen to the responses brought by the different members of the panel and representatives of different types of providers. And the question will be, would it be conceivable that a provider would not be able to at least provide the capital which was invested. This is something which does not seem to be conceivable to us. On the issue of portability and tax, yet again a very relevant question, and that's where the support of all stakeholders, and I'm always extremely grateful because we have been able to build this initiative on the basis of contributions which were very solidly grounded and substantiated. You know that in the framework, in our treaty, if we want to establish a tax initiative, if we wanted to table a specific tax regime for the PEP, we would be confronted with unanimity in Council. So this is not something which is really terribly realistic today, although this would certainly be the best possible way forward. So we have to make do with the situation as it is today, and you will see some measures which will accompany our proposed initiative when it will be adopted, and it will be very important to convey a support for this initiative to member states, to encourage member states to grant PEPs preferential tax treatment, to grant to the PEP the tax relief that they do grant to their national personal pension products, even in cases that these PEPs would not necessarily match with every single criteria which conditions the attribution of tax relief. And in the case that a member state would have several different regimes, pension regimes or tax regimes, in some member states we have 3 or more than 3, that the member state would take the commitment, or would encourage the PEP actively by granting to the PEP the best or the most favorable tax relief that is available. And this will, of course, be a long-term action. We will need to see what will be the treatment of the PEP, what will be the tax treatment of the PEP in the member states, and we will certainly invite member states to let us know what will be the measures that they would have taken after a few years of application of this statute, to see what should be done. So portability will be very important, and we will propose in this initiative a scheme which will allow portability, which will allow a consumer to continue contributing in a PEP even when changing residence in several successive member states. You will see a solution for this. But of course, the tax issue is certainly the elephant in the room, and for that a lot of convincing will need to be done with the member states. Finally, on the question relating to the situation of companies, I should remind that here we are in what is generally designated as a third pillar. So this is nothing to do with the state pension system. This is nothing to do with the occupational pension systems or pension funds or occupational pension schemes, not with the involvement of a sponsor or a company. We are here talking of a product, of a possible contract, which is to be done in between a financial services provider and a person. And I would link with what Johan said earlier on when he pointed to the situation of the self-employed, and it can be other people than the self-employed, thinking of mothers like me who would maybe have decided to not work for a number of years but would still be interested to contribute to that type of pension product even when they would wish to interrupt their career. So we also think of that type of possible consumers, but the PEP initiative is only directed at a voluntary contribution by private persons to prepare for their retirement income. Thank you.
Thank you, Natalie. according to our external agenda, we ought to close the panel now because we have a closing speech, and I know that the speaker will have to rush out. However, I'd like the three other panelists to quickly intervene very quickly on the last question about capital guarantees. 30 seconds each. Catherine, you start.
Yeah, I think it's a really super interesting question. I mean, the reality of life in capital markets is with no risk, no returns. There's this really tricky balance to be struck between piling on these protections, which will kill the outcomes returns-wise. For me, the answer is to have exceptionally strong governance regime where you've got, really trusted expert agents on the boards of these organizations. You've got low fees. You've got complete transparency and visibility around how these organizations are doing compared to each other. But if you pile on too many guarantees, my personal view is you will kill returns and you won't generate the outcomes that we're hoping this is an initiative designed to secure. But I know there's different perspectives on that. That's mine.
All right, thank you. Johan.
Well, first of all, I would like to agree with Mr. Prasch that transparency of cost is a very important issue. And that is something which we have to pay serious attention to. This does not necessarily mean I would agree immediately with the methods he uses to calculate, although I brave here to say that in his last report, Dutch pension funds came out reasonably well. Dutch Central Bank, DNB, publishes these figures for all Dutch pension funds openly for everybody on their website. It is mainly in Dutch, but it's really there. This is an important issue, but guarantees, whatever guarantee, they are never for free. So they may hurt your return on investment for the participant, and that is the really important thing. Seen from APG, if we are going to engage in this particular market, I don't think you will find us to be a party, not even the insurance company in our group, which is going to offer you this enormously wide range of different investment types. It's not our type of business. I would be extremely surprised if that is what we would be doing. What we would be doing is looking at possibilities to make people invest together with our big Dutch pension funds, and they are protected in a completely different way against negative outcomes. So we would feel this not to be too much our discussion. We would advise not to go too far in protection of this nature, but look at it in another way. But if something comes out which we think would not be viable for us, I think we can still be extremely happy providing services to EORPs. But if too many people do that, then our initiative is not going to be overly interesting. On taxation, very quickly, to say something, I think the big worry for tax policymakers, and I did that myself almost half of my career, is providing people with temporary tax incentives where later on there's no taxation. And this is typically which happens in cross-border situations. So that is one of the reasons why portability may end up being difficult, but I'm extremely curious for the report and the assessment which comes out on Thursday, and I will really study those.
Excellent, thank you, Johan. Ilka,
thank you. Well, you will not be surprised that I do advocate for guarantees. Also, in a PEP, Guillaume, thanks for raising that question. And I would say that I think it's a little bit of fairy tale that it kills all the outcomes, but I admit guarantees are challenging in a very low interest rate scenario that we're facing in the European Union right now, and no one really knows when these times will be over. But I wouldn't say, you mentioned it, Johan, guarantees are not for free, but that means, on the other hand, securities have a price, and if you want a certain stability and security in the system, you need to balance it and to maybe think about new guarantee models that can cope with this. Because I think there's one point that has been made on the panel before. If you're retiring when stock markets are high, that's nice. But if you're retiring if they're on a very low level, then what's to do? And I think we can learn from the US-American experience in the last crisis, where a lot of pension funds closed down. A lot of people had to work longer. And I'm not sure if this is what we want to have here in the European Union. So I think let's figure out how these things can work, how we can find a balance between returns on investment and a certain level of security. And this is maybe something that is the challenge for all of us in every market we are representing here today. But no guarantees wouldn't be the solution from our perspective.
All
Thank
right,
you.
thank you. So before I close this panel and hand over to the closing speech, I have one last challenge because we're talking about challenges. For each and every one of you, qualify your ideal PEP with one word, ideally, one adjective.
Goodness.
Nathalie.
Pan-European.
Thank you. Ilka?
I think I would leave it with successful and broadening, really broadening, we're enlarging.
Enlarging. One.
Fully digital, including advice.
Thank you.
Robust, independent governance of the boards of the PEP institutions.
All right, here's the wish list. Thank you very much for listening, and please stay with us.
Thank you.